Welcome to Ringside with Perspective. This month I've got Mikael Lieferink, my co-founder and co-portfolio manager based in Cape Town, and myself, Daniel Malan. Clement is on holiday this week, so we've excused him from the vlog recording. But without further ado, let's get cracking. We've got another full agenda as always. The first one on the slab is Wilson Bailey Homes Ofcon. It's a company called, it's a construction firm listed in South Africa. Mick, tell us a little bit more about our thoughts on the company at the moment.
So, Donnie, perhaps taking it back to a couple of years. So, I'm a civil engineer, and way back in 2003, 2004, deciding what to study, there was a lot of hype in the market at that stage, and there was a lot of demand for engineers. And it was part of the reason why I ended up going into that, because it seemed like a very good degree, and there was obviously a lot of work out there. So you don't want to study something and not have work afterwards. But just to give you context, so during that period, there was a whole bunch of private investment in construction and also public investment in construction. So there was something called the Bus Rapid Transport System. There was a Gautrain that was being constructed. We had the 2010 World Cup stadiums that had to be built all around South Africa. And on top of this, you also had a commodity super cycle. So gold prices were strong, platinum prices were strong, and the mining majors were spending a lot of money in expanding and upgrading their current process plants and mines. So there was a lot of demand, and that inevitably prompted the construction companies to take advantage of this. And we saw a host of listings coming onto the JSE at that stage. WBHO was already listed, but someone like a Raubex took advantage of us and IPO'd at a very decent multiple. And interestingly enough, I had a project management professor who at that stage advised all of his students in the class to buy this new IPO called Stefanuti Stocks. It's going to shoot the lights out, you hold on to it forever and you'll make a ton of money. And had we listened to him, it would have resulted in a minus 99% decline in the stock, right? Because I think it was at its peak in November 2007 at 26 Rand 90, and it bottomed at 8 cents. And it's now trading still at a low price of like 3 Rand 20. But it just shows you the sentiment is not just in people that watch the markets, but it's widely permeated in the industry. And then fast forward to a couple of years, so say from 2016, 2017 onwards, there was a lack of infrastructure spent by the government. There was no real spend by the private sector. And then we also had the effects of COVID. And on top of that, a lot of these construction companies had a very bloated balance sheet. So they had a lot of debt on their balance sheet. And that's one of the things that you don't want to have if you go into a difficult period. And as a result, there's been this massive consolidation in the construction industry. And we've owned WBHO now for quite a while. And it's had its own problems, especially in Australia, which it's fortunately exited now. But nonetheless, one of the things that we really liked was that it always had a very good discipline with maintaining a strong balance sheet. And that really helped it, kind of navigate this storm in the construction industry and even its own pains in Australia. And subsequent to that, it's gotten rid of its Australian assets and its Australian businesses. It's still got a very strong balance sheet, and it now is one of only a few participants still left in the construction industry, especially so in the listed space. And besides that, now that there's more government spend coming through and more private sector spend coming through in construction, there's only a handful of companies that can really do these really large-scale projects. And we are starting to see this coming through in WBHO's fundamentals.
Yeah. I think we've also seen they've kept their engineers, employed and keep that talent pool going, because Wilson Bailey was actually roped in to finish a lot of the failed projects of their competitors that went under. So basically the company's been hustling to keep their talent pool together.
Yes.
And our hope, of course, is that if South Africa gets its act together and starts spending a bit of money on infrastructure development, that really Wilson Bailey is the only phone call that you can make if you want to access the talent pool of civil engineers that is available in country.
Absolutely. Absolutely.
The next topic we want to discuss today is the listing again of a company called Rainbow Chickens that has been spun out of RCL Foods. RCL Foods is control-owned by Remgro, that we have owned in our portfolios for many, many years now. So we know these companies well. This is not the first time that Rainbow Chickens has been listed. This is one of the older listings on the JSE. So it's very interesting to see it back on the market as a listed company. And we now own all three of the companies. So we own Remgro, we own RCL Foods, and now we own Rainbow Chicken as a separately listed company. Mick, you want to tell us a little bit about the context here of the overall group and what we think is happening to these companies?
So going back a few years, they had a lot of their businesses were listed and they were successfully listed. But it no longer made sense. So their strategy as a holding company was to move more into the private space. And with that, we've had Distell being bought by Heineken, and there being a minority offer to shareholders, which they did at a very attractive multiple. And that continues to be in Remgro's stable, but as a private business. Then we've had Mediclinic, which was also in JV or a joint venture with MSC. And Remgro continues to own that asset, but they also made an attractive bid to minority shareholders in that space. There was the RMI unbundling and the Grindrod sale. And then subsequent to that, now in the context of RCL and Rainbow Chickens, RCL has now unbundled Rainbow Chickens and separately listed it. It's divested from Vector Logistics, and it only really has its sugar assets and its foods assets still within RCL. So in the context of what Remgro said it would do and has done in many of its other businesses that it owns, it makes sense to us that at some stage they might also look to either sell or to take private RCL and or even Rainbow Chickens.
Yeah, that's interesting. I mean, I think if you listen to the company at the Remgro level, it was very clear that they don't want poultry assets. I mean, they don't like the high cyclicality of that business. And the impression we got was that they wanted that asset to be separated from RCL Foods so that they can prepare RCL Foods to be taken private inside and possibly merge with their Harlow Foods business that they already have within Remgro. So it's going to be interesting to see what happens there. We don't think RCL Foods is long for this world as a listed company. So we'll see what the next step is. I mean, Remgro might decide to exit the sugar assets before they take RCL Foods private. We don't know, and so we'll see. The other thing that we think about as well is that, of course, we can see from the evidence of a long history that Remgro has always done the right thing by minorities. They offer a fair price, but that doesn't mean it's going to happen again. So, we will see how this goes. But these are interesting assets because they have very small free float or available shares to trade in the market. So these assets are under the radar. There's not a lot of analysts that cover these companies or know much about them. And so in that sense, we feel it's right up our wheelhouse. We definitely see a lot of value in these businesses, and we're happy to pay attention to some of these smaller companies. Our whole portfolio does not consist of smaller companies. This is a small part of a much bigger portfolio that we put together. Moving on to our next topic, it's a company called Barrick Gold, which we've owned in smaller and larger sizes over the years. I mean, it is a gold mining company. It's got a very interesting origin story, and I'm going to pass this one to Mikhail to tell you about.
We did an industry deep dive in 2018 on the back of looking at the marginal cost of production of gold, which at that stage we estimated gold was selling below what it cost to produce it by all the gold mining companies. So I think it was trading at something like $1,200 back then, and it cost them in excess of $1,250 to pull an ounce out of the ground. But we understood fundamentally that gold mining companies are not good businesses. And we always think back of that Mark Twain quote, although perhaps someone said it before him, but a gold miner is, a hole in the ground that's owned by a liar. And with that context, we kind of developed this mental model to see if we could find any good gold mining businesses. And we had a set of criteria that we developed ourselves. We weren't expecting to find any. And somehow 2 of them actually popped up at that stage, which was Randgold Resources and Anglo Gold. And we owned both of those. And in owning Randgold, they then got acquired by Barrick Gold later in 2018. And from networking widely with our expert network and with other people in the gold mining industry, we realized that the CEO who was heading up Randgold Resources, Mark Bristow, was in fact a clear standout leader in this space. And he was very disciplined in the way that he ran the mines that they had and the business and allocated capital. And so we were very pleased that once he had been acquired, or Randgold had been acquired by Barrick Gold, he became the CEO. And subsequent to that, the chairman of Barrick Gold, who was in an executive position, has subsequently taken on a non-executive role and given more of the leadership and steering capacity to Mark Bristow, which we are definitely in favor of. But Daniel, perhaps you can also just touch on what we've evidenced now over the years, and especially recently in the results of the company and the presentation.
I think for me, I'd like to start by just adding emphasis on the leadership side. Mark Bristow is really one of the most impressive CEOs that we've ever come across in any industry. And what's interesting about this is that the gold mining companies, they have quite a colorful host of characters at the top. People like Nick Holland and Neil Froneman of Sibanye, these kinds of people, they're sort of larger than life characters. And Mark Bristow is a real standout as somebody, he's tough as nails. You have to be in that industry. But he's got a very interesting level of deep understanding of what it takes to build shareholder value long term. So his concept and his conceptual and practical understanding of shareholder value creation is really excellent in our view, and that makes it a real standout. It would be a standout in any industry, and it's remarkable to us that to have found a leader with that understanding in the gold mining sector is very bizarre almost. And I'd almost say that's probably one of the most interesting aspects of this investment in Barrick Gold, which in a bizarre kind of way we sort of backdoored via Randgold. And the chairman, formerly executive chairman and now non-executive chairman, John Thornton, he is also one of these big characters. And it's amazing that he's taken a back seat now, and clearly he's handing over, or our hope, of course, is that he's handing over to Mark Bristow to really run the show properly. And that's our take on it. If we look at the communication from the company, it certainly seems to me that Mark is fully in charge of Barrick Gold. They've also developed a significant copper business, And the latest update is that they are busy expanding that copper assets production, and it'll essentially now be as big a business as the copper business within Anglo American. And we also know that BHP Billiton has made a big song and dance and a bid for Anglo American, and they are very excited about the copper assets. So it's just this sort of almost hidden asset that's sitting within Barrick Gold that could eventually be monetized for potentially a very substantial, amount of money. So yeah, that's some extra color on Barrick Gold. On to the last topic for today. We've been identifying some new ideas in the last while. It's been slow going. The global markets are high. We're very well aware of that, and we've been talking to you about this for years now. But there are increasingly, there's little pockets of opportunity, and we are very excited about this. So underneath the very high levels of particularly the US market, led by a highly concentrated group of technology stocks, underneath that there's sort of trouble in paradise. And there's certain sectors and industries and countries around the world where there's been a lot of difficulty, and that's been captured in the share prices of these underlying assets. And so we've seen some very significant share price declines in several sectors and several countries around the world. It's not really mainstream media news, but it's the sort of thing that we pay careful attention to. We've come to understand and appreciate the dynamics of the fertilizer industry, which is quite cyclical. And there's a fairly small group of globally listed fertilizer companies. They are very nicely profitable. They are very highly cyclical. So the market occasionally, in our view, gets them quite badly wrong. So when they produce, almost like construction companies, when they produce super high record earnings on a cyclical basis, sometimes the market gets overexcited about that and re-rates the share prices through the roof. And then, the inevitable cyclical decline comes, the earnings collapse, and the share price, craters. And then the opposite can happen, and the company can overshoot on the downside into the cyclical trough of the cycle. And the company can produce either very low profits or possibly even a small loss, or in the worst cases, a very big loss. But these companies, fertilizer companies in particular, in comparison to construction, they are the ones that are listed are major players in the industries, and they are a critical input in global food production. You cannot feed the world without fertilizers. There's just simply not enough food in the world to feed the planet, the human population and the animal population, of course. So there's an interesting sector, and we've been following it for decades, literally. And there's a company listed in Canada called Nutrien, which was formerly called the Potash Corporation of Saskatchewan. And they produce, they're a major player. They're one of the, they are in fact the largest fertilizer producer on the planet. And it's a substantial business with nearly 40 billion Canadian dollars of annual revenue, major business with, I think, 75,000 employees. So this is not a small company. And it's about a $30 billion market cap company as well. So it's not a small company, even on the stock exchange. It's a major business. We've been watching this business for a long time, for many years. We've never owned it before. Its share price has been under a lot of pressure. The fertilizer prices have come down. There was a cyclical peak in earnings a couple of years ago. And once again, the market, in our view, got it wrong, pushed the share price up with the cyclical peak. And now we're on the other side of that trade. And there's a cyclical trough in earnings. And this share price has, been basically smashed as a result of that. So we think this is the beginning of an opportunity. And we've taken a small, what we call an initial weight exposure in the company. We do our work before we get involved, and then beginning of the deepening of our work. You start following the company properly, and basically say you start checking if they do as they say over time. We check the history for that, But from the point you start your ownership cycle is when your real learning begins with any company, and we know that well. Mick, I don't know if you want to add anything to what I've shared so far on that.
I just think it's important to understand that Nutrien sits on a fantastic resource base with potash, and so again, like a gold miner, a mine is only as good as the stuff that's underground or the stuff that's on its land. And in this case, Nutrien sits with a fantastic resource base, similar to Kumba Iron Ore with its iron ore assets. And this really does put it in a favorable position globally, as it can produce really high quality fertilizer inputs.
It reminds me, Mick, to also share that the Canadian government, BHP Billiton actually made a bid for Nutrien about 10 years ago. They tried to take the company private, and the Canadian government stopped it because they consider Nutrien a strategic national asset. From a global point of view, also in the context of geopolitical risks and wars and things like that, food security is a really important thing. It has always been. If you look at the history of the world, food security and water security is really, really important.
You don't want the world to become hungry.
No, the revolutions are built on hunger. So politicians are quite aware of that. But yeah, so it's a fantastic business. It's got a very long track record of super profitability, even through the cycle basis. It is more volatile than Nestle, but we feel that we understand that well enough to make a sensible judgment on when to get involved in a company like this. So that's a wrap for this month's edition of Ringside with Perspective. Once again, that's Mikael Liefrink, based in Cape Town. Myself, Daniel Malan, based in Canada. We are excited about our portfolios, and in the context of this volatility in the markets, we try and our level best to keep our focus on the fundamentals. As you can hear the discussion today, it's all about what's really happening on the ground in our companies. That's our main focus, is on the very common sense, pragmatic business side of things. We know that share prices will take care of themselves if we focus on the fundamentals. And thank you for your time once again, and our work continues. Thank you.